Hey, this is Sasha and welcome to another episode of Let's Talk Stocks. And today we're going to go back to another technical analysis basics video. And we're going to look at symmetrical triangle patterns. We're going to take a look at both the bullish and the bearish case scenario. For this, we're going to take a look at what they look like, previous trend volume, projections, entry point, and a few final tips. So let's get started. I'm going to start out with kind of the bullish scenario. I want you to keep in mind that the symmetrical triangle pattern is a continuation pattern, which means it continues into the future. It's just a pausing pattern that slows things down, allows things to digest, and then moves forward into the same direction that it came from. You also have reversal patterns that change direction, but this one is a continuation pattern. So if we look at the symmetrical triangle, what it really looks like is you have a triangle that's pretty much like this. It's going into a V formation kind of sideways. Kind of think of it like a bracket on your keyboard. And when you're looking at this, it could almost resemble a pennant pattern, but it's a little bit longer. So when you look at a bullish case scenario for this, it's starting out from lower level prices, and the stock price then continues to increase until it hits kind of the first resistance level, and I'll call it R1. We then start kind of a pullback, and we start creating a second point. This will be our supporting level 1. We'll move up into higher prices again, resistant level 2. And this is where you can slowly start creating a slope where the pattern may slowly start looking and evolving like a triangle. Right now, you don't know if it's going to be kind of a descending triangle or this symmetrical triangle, okay, because you only have one supporting point. But here, as we start continuing and creating, let's say, support level 2 and moving up, and we have resistance level 3, you can slowly start seeing how things will evolve, okay? Now, what happens with this pattern eventually, because it is a continuation pattern, this pattern eventually will break out to the same direction that it started from. So, this triangle really was just a pausing moment, a moment for you to digest the upward trending movement, because that movement on this upside was a little too far too fast. So prices get a little stretched. People think, hey, I need to take a little bit of profits. So it pulls back. But they say, hey, this is a good deal. Other people are starting to come in. It's a good deal to get into that stock. It's been heading higher. Let me get in on it. They've been waiting. And they continue to do this kind of motion where you have some buyers that are selling, and then you have other people buying in at lower prices, and it creates this kind of a crowd psychology effect to the point where enough buyers are now fully stepped in, more buyers are getting in, to allowing the price to continue to move higher. Now, when you look at volume on this, you want a higher volume to the direction that it's moving or continuing. So higher volume there. When you're doing this consolidation phase, you might get a little bit lighter volume here. Okay, so it'll be light. And then heavier volume also as you're kind of moving to the upside. Now, if you're looking at individual bars, what you'll normally want to see, and it's a little tough to see those things, is anytime you're getting pops or movements to the upside, it would be nice to see more higher volume there because remember that movement is going to continue into higher prices in the future. So it would be good to see those, but it's a little bit more difficult because usually in this consolidation triangle phase, it's a little bit more of a distribution pausing pattern, so a little bit less volume will be traded. As far as the projection goes, you're looking at kind of this R1, S1, so resistance 1, support 1 that's being created, and you're looking at that distance. So if that distance is, let's just say, this long, or I'm going to say half of my hand, then you'll do the same thing as when the breakout is. You'll go about half of the hand, and that's kind of your target, okay? Doesn't always work out that way. It doesn't work out perfectly, but this is around your goal on that projection. Now, in all big case scenario and the way you look at things, with time, with inflation, that thing could run up 10, 20 times higher. Look at it 100 years from now, yeah, that thing could skyrocket to the moon. But in general, from a pattern perspective, you're kind of looking for about that range width of the triangle to hit your target. If you're looking for entry points, one of the good entry points would be right after we break out of the triangle pattern, and just a little above it to give it room to make sure it breaks out. You could do it also on the bounces. You'll probably notice these on like support 2, support 3 levels. You could do it there, but that's a little early, because what happens is if this thing rolls over, well, then you could be in a little bit of trouble, because you don't know if this could start digesting, distributing, and then roll over. So usually you'll wait till entry point kind of right up here above all these resistance levels, or this descending resistance line, and when the volume picks up and it's moving to the upside. So that's kind of what I would do as far as the entry point goes. Sometimes you'll also get slight little pullbacks here where this will retest that kind of triangle pattern, and then you could get in it just on that retesting of that resistance level, which will be support. So that'll be kind of entry point number 2. If we're looking at the bearish case scenario, it's very similar actually. The main difference is when you're looking at kind of your triangle pattern on the bearish side is instead of going from lower prices, you're going from higher prices to lower levels. And then you do the same kind of isolation movement, and you'll expect that stock price to head lower. Okay, so here you have kind of resistance levels, and that'll be a 1, 2, 3, 4. And here you have some support levels that it may hit, and then again support level 1, 2, 3, 4. You may not know that this pattern is evolving here up until about the second point, and even then it's tough to see. Usually by point 3 and 4 is a little easier to see. If you're looking at an entry point, this of course would be for a shorting opportunity, but an entry point would be somewhere right after it breaks the supporting level of that symmetrical triangle, and then it moves lower. And of course you're looking for higher volume this time as we go down in price. So you're looking for heavier volume, especially as you break, probably lighter volume as you're moving sideways, and then maybe heavier volume on that initial sell-off. So that's kind of what you're looking for, because you want the volume to always be heavy in the direction that the price is moving to. Or when the price is moving very quickly, typically you'll get heavy volume. They kind of work hand in hand together. So that's kind of what you're looking for when you're looking at a symmetrical triangle. It's a continuation pattern. If you have a bullish movement, you're basically going from lower prices, then you're pausing a bit, and then you're moving higher. If you're looking for a bearish movement, well, you're moving from higher prices, you'll pause a bit, and then it'll move lower. And then eventually you might get into lower prices here where the stock bases and then continues moving higher. It could create a double bottom over here, a triple bottom. You know, it could create multiple things here. It could just digest here and then continue moving higher. Remember, this is just a pausing pattern, and most of the time stocks appreciate with time. It's just a question of how long are they going to pause here for, how big is that sell-off, and also when you're looking at the distance of how far this will go bearish, it's the same as it would be in the bullish side. So you're looking at the range of that triangle in the fatter area, and then just move it down, and that's kind of would be your target. Of course, just like in the bullish scenario, in the bearish scenario, it could come up and retest those levels and then roll over and move into lower prices, giving you another kind of entry opportunity if you've missed the first one. So anyways, that's basically the symmetrical triangle pattern, and you know, it can work in both directions, bullish or bearish. So welcome back to the screen, and here what I'd like to do is share with you a symmetrical triangle pattern example. So that way you can see what it looks like with some bars and ticks. Now here we have an example of Google around 2006, 2007. The stock continued to move into higher prices. So as we look at this stock and you look between 2006, right around the $250 price range, you can see the stock was declining a little bit, and then we also have another lower region where the stock was increasing a bit from about 150, 160 to about 185. So this creates kind of our symmetrical triangle. So you can see we've kind of moved to the upside. We have this range on this symmetrical triangle. And then to the upside, of course, we'll probably go about that same distance, which with Google we did. And in fact, now we're in the $1,000 range on the stock price. But for the short term, this chart did work out, and you can see there is kind of our symmetrical triangle. And as we got that little breakout, you can see also we have more volume that came in, and during that triangle phase we had a little bit lighter volume that digested, right? So you can see all that volume that was coming in earlier, and then when we hit the triangle we digested a bit, so volume decreased, and then eventually volume picked up as we moved into higher prices and broke out. I want to show you another little example here with Bank of America. This was back in 1997, 1998. So the stock price was a lot different at the time. Between that $22, $24, $26 range, you can see the stock right around the $36 range created a little bit of a high, and the stock was declining. Now, if you also look at lower levels, this stock was also trying to kind of move higher as well. So that's our little symmetrical triangle pattern there in Bank of America. And eventually we did break out of that symmetrical triangle for higher prices. And as you can see, kind of that range, we're kind of looking for about that range in the stock, which we got into about $42, where the stock did eventually pull back. But nevertheless, there's our symmetrical triangle that we had from about mid-1997 to 1998. Stock moved up. We had a sideways kind of a symmetrical triangle pausing pattern. And then again, we moved into higher prices. And the range and the distance is kind of from that peak to those lower levels. And then again, we had that movement. Stock moved up, and it seemed to work out fairly well. All right, so thank you so much for joining me in this week's video. I hope you found it helpful to learning a little more about technical analysis. And if you did and you want to see other great training videos like this one, get on the newsletter list right here. Click that button or in the description below and enter your name and email address when you get there, so that way you get notified as I release new great training videos along with new books, courses, and other great training material. Thanks again, and I hope to see you next time.